The last few weeks might have been some of the craziest ever in modern financial history. Right now, the economy is in a total dumpster fire. The stock market is on the verge of collapse. Economic crash is trending on Twitter. Trillions have been wiped off the housing market. The cost of living continues to explode for millions of people. And the Fed's chairman has basically just told people to go hide in bunkers. And even though Joe Biden previously said this,
by the way, the stock market's gone up exponentially since I've been president.
the reality is more like this. Because the stock market has just taken one of the biggest hits in history, meaning many financial leaders have stopped predicting a crash is coming. Instead, they're saying it's already here. So, just what the hell is actually going on right now? And are we living through history? Has this predicted financial crash already started? Let's figure this out together and also find out how you can potentially prepare for what is coming. But first, a little recap of what has led us to where we are today. A few months ago, we made a video about how a financial crash was possibly coming and how prominent financial figures were predicting the economy would get seriously bad later this year. Michael Burry, for example, predicted that we'd start to see signs of an economic collapse by the end of 2022. Jeremy Grantham said if a crash came, it would be devastating due to how many asset classes it would include. And Robert Kiyosaki stated that we were on the verge of the crash of a lifetime. But to be fair, Kiyosaki has been saying that for more than a decade. At the time though, the mainstream narrative was that we shouldn't pay attention to these predictions. The Fed's chairman, Jerome Powell, said the economy was in strong shape. Treasury Secretary Janet Yellen described inflation as transitory and something that would be easy to control. And Elon Musk described Michael Burry as nothing more than a broken clock, one among many who were suggesting he shouldn't be paying attention to. So even though the world economy seemed to be totally fine, the general sentiment was that we should just carry on as normal because everything would end up just fine. So a few months later, how have these predictions panned out? Well, unfortunately for us, it appears that the numbers aren't looking so good, and it does look like we've just entered the early stages of things going wrong. Over the last couple of weeks, things have taken a turn for the worst. The stock market hit its lowest level so far for 2022, wiping off more than 20% of its total value or destroying around $9 trillion from the wealth of American households. And we experienced the single biggest day of financial losses of the past few years, prompting stock market crash to become one of the top trends on Twitter. It was also just announced that credit card interest rates would hit their highest rates in over 2 decades. And in the Eurozone, inflation has just hit 10%, the highest rate ever recorded. To top all that off, Russia's entire stock market experienced a crash as well. The result of all this is that many believe we've now entered the start of a major financial downturn. And this time, it's not only those on the fringes who believe there's something seriously wrong. Janet Yellen has taken back her view on inflation being transitory, saying she now regrets her comment. And as for Jerome Powell, well, he's now saying we should hope for the best whilst planning for the worst possible outcome. So it seems that the tables have turned, and basically there is no more hiding from the financial storm we might have just entered. But there is another side to this drama as well, and it's got everything to do with real estate. Over the last 2 years, basically the entire world's real estate market has become inflated. In some nations, house and rent prices have increased at astronomical rates. In Australia, Canada, and the United States, property prices have skyrocketed up to 25% higher. In Argentina's capital of Buenos Aires, the cost of rent has increased by over 60% annually. And in Turkey, house prices went up by over 170% in just a year. But as the saying goes, what goes up must come down. And banks are betting big on the fact that the housing market as well is due for an imminent crash. Recently, Goldman Sachs, one of the biggest banks on earth, has suggested housing prices are about to take a big dive, predicting that over the next year, a major housing crisis would wipe out up to 21% of the value of real estate in places like Canada, Australia, and New Zealand. And like the signs we're seeing in the stock market, there are already signs we've entered the first stages of this crash as well. In the United States, housing prices have just dropped at the fastest rate since the 2008 housing collapse, which is also the second biggest drop in prices in the last century. In Australia, the UK, and Canada, Real estate values have dropped by multiple percent points already. And in New Zealand, house prices are already falling by $10,000 per month on average, giving a lot of credibility to Goldman Sachs' earlier prediction. Long story short, it seems that the fear of a housing and real estate market crash are already starting to come true. But here's the thing, it's not as scary as you might think. And there are some big lessons we can learn from what's happened leading up to this crisis so far. And I'll talk about that in a second. But first, I just want to mention that we have an incredible newsletter of 75,000 people plus that are getting extra financial nuggets in beautifully written stories. People love the newsletter. Check it out, link in bio. Okay, so with us being on the cusp of a crash, there are two things we can learn from this whole situation. And both of them are a result of looking back at history when things like this have happened before. And the first of which is knowing who to listen to during times like this. In cases where massive sums of money are on the line, it's human nature for most people to want to save their own skin. Take the examples of Yellen, Powell, and Musk I gave at the start of this video. For many people in finance, it was obvious for months or years earlier that we were facing a serious economic downturn. So why would they downplay the seriousness of what many other people could see coming? Well, for Yellen and Powell, their reputation as economic leaders of the United States was on the line. And until it was impossible to hide, it's possible they didn't want to admit things were really this bad, because inevitably many people would blame them for being responsible for helping to create this situation in the first place. For Musk, admitting Michael Burry might have been correct about the stock market could have negatively affected Tesla's share price, creating fear that could lead to people selling their stocks and putting the financial security of his company at risk. Now look, these examples are extremely hypothetical, and it is possible that Yellen and Powell were being honest when they said a few months ago that there was nothing to worry about. But to me, this is an important lesson in considering what someone's motives might be, especially when it comes to them telling you what to do with your money, or when they're telling you that there is nothing to worry about, even though the financial landscape looks pretty terrible. And with that, here is lesson number 2, and that is about keeping certain things in perspective, even though it looks like a crash might be coming. Over the last 100 years of human history, there have literally been dozens of financial crashes, times where economies have been destroyed and people have collectively lost billions. But it's important to remember that we've always come out on the other side. And if you're prepared, a recession or downturn can be a great opportunity to build wealth. As the price of assets like real estate falls, it can make it more affordable for many people to buy in. And if you have a good credit score, recessions can be great times to leverage debt, as lower demand for borrowing usually leads to generally lower interest rates. Meaning, if you're prepared, a financial crisis doesn't necessarily have to mean bad news. In fact, it could be the time that you begin to set yourself up for future financial success. Look, only time will tell if the signs we're seeing right now are the start of a larger financial crash coming. And it certainly does seem to be so, which means that for the majority of people, we are metaphorically standing at a crossroads where we decide whether we're going to ride this thing out as a victim, allowing what's happening to dictate our financial security, or we choose to get educated and study from the multitude of examples of past crashes and collapses and the steps people have taken that have made them come out better than others, or even better, the steps people have taken to become very, very rich during these times. So what will you decide to do now that the writing is on the wall? I know I've chosen how I'm going to be riding through this wave. The question is, have you? Anyway, thank you so much for watching. If you enjoyed this video, you might also like the video we recently did on the weird things that have happened to allow for this crash and the financial situation we're in to be happening right now. It is on your screen right now and you can click to watch. Otherwise, don't forget the newsletter. 75,000 people raving about it. You don't want to miss out. Link in bio. Also subscribe and comment. We would love to have you part of this community. And finally, we have a private membership where we talk more things, finance and freedom, to get people living the path of their dreams. There is a link in bio for that as well. And I will see you in the next one.